Alex checked his bank app before he pulled into the gas station. The number looked fine, enough for gas, enough to get through the week. So he filled the tank. What he didn't see was the automatic bill that was still pending, the one that hadn't cleared yet but was about to. It posted that night, and it posted first. By morning, Alex's account wasn't just low, it was below zero. The bank had covered the gas, then added a fee bigger than the shortage that caused it. The purchase was small, the penalty was not, and it didn't stop with one fee. So how does someone who checks their balance still end up overdrawn? Usually it comes down to one thing. The number you see is not always the number that counts. When you open a banking app, you might see two different balances. One is the current balance, the money sitting in the account right now. The other is the available balance, what you can actually spend after pending transactions are accounted for. They are not always the same. And the timing is where it gets slippery. A debit card swipe might show up instantly. A check might take days to clear. An automatic subscription might post on a date you forgot about. A bill payment you scheduled last week might land at the worst possible moment. All of these move at different speeds, so Alex looked at a number that was technically true in that moment and made a reasonable decision based on it. Then the timing shifted underneath him. The money he thought was there had already been promised to something else. This is not carelessness. It is the system working exactly as designed, just faster than most people can track. Now let's talk about the fee itself, because the size is the part that stings. Say Alex was short by $5, just 5. The bank covers the transaction so it doesn't get declined and charges an overdraft fee. We'll use $35 as a hypothetical example because a lot of people recognize a fee around that size. But the exact amount depends entirely on the bank and the account. And some banks charge far less or nothing at all. So now the account isn't negative $5, it's negative $40. A $5 shortage just became a $40 hole. And that hole is where the real trouble starts. Because the overdraft fee doesn't just punish the shortage, it becomes part of the next shortage. Picture the account sitting at negative 40. Alex doesn't know it yet. He thinks the gas went through and life is normal. Then a $12 streaming subscription posts automatically. The account was already negative, so that $12 pushes it deeper. And depending on the bank, that second transaction can trigger another fee. Add it up. Negative 40 plus the $12 subscription plus another $35 fee. The account is now negative $87. Alex started with a $5 gap. He's now $87 behind, and he may not even realize it until he checks the app again. That's the chain. One small shortage doesn't stay small. It creates the conditions for the next fee, which creates the conditions for the one after that. Now, you may have heard of overdraft protection and thought it sounds like the safe choice. And sometimes it genuinely helps, but the word protection does a lot of quiet work. Overdraft protection usually means the bank lets the transaction go through instead of declining it. That can matter. A declined card at the pharmacy counter is its own kind of problem, but protected doesn't always mean free. Depending on your bank and your settings, it might mean an overdraft fee. It might mean an automatic transfer from your savings, sometimes with its own transfer fee. It might mean a linked line of credit that charges interest until you repay it. Protection from an awkward declined payment is not the same as protection from cost. They can feel identical in the moment and look very different on your statement. And then payday arrives, which should feel like relief, but it often doesn't. When the paycheck lands, the bank typically takes what it's owed first. The negative balance comes off the top. The fees come out immediately. So Alex doesn't get to start the new pay period at zero. He starts in the hole the fees dug. Rent still needs paying. Gas still needs buying. Groceries still cost what they cost. But the paycheck is already smaller than he planned because part of it was claimed before it ever arrived, which makes the next shortage more likely which makes the next fee more likely. That's how a single timing mistake can echo for weeks. It's worth saying plainly, this hits hardest for the people who can least afford it. If you have $500 sitting in your account as a cushion, a badly timed bill is just a minor annoyance. The buffer absorbs it. If you have $10 of breathing room, that exact same timing mistake becomes a $40 problem, then an $80 problem. The smaller the cushion, the more expensive timing becomes. It's not about discipline, it's about margin, and the people with the least margin pay the most in fees. So what can you actually do about it? Start with alerts. Most banks let you turn on a low balance notification, a text or push alert, when your account drops below a number you choose. That one setting catches a surprising number of problems before they happen. Learn to read your available balance, not just the current one. The available balance is the number that's closer to the truth, because it accounts for what's pending. Know your automatic payments and which ones hit, and roughly when. If two big automatic bills land on the same day every month, that's a danger zone worth knowing about. Sometimes you can call the biller and move the date to right after payday instead of right before. Keep even a small buffer if you possibly can. Not $500, that's not realistic for everyone, but even a small cushion left untouched changes the math. Ask your bank exactly how your overdraft settings are configured. Find out whether debit card overdraft is turned on for your account. For some people, turning it off so the card simply gets declined instead of triggering a fee is the better deal. For others who'd rather the payment go through, it isn't. There's no universal right answer. It depends on which outcome you'd rather face. And if you do get hit with a fee, it's worth calling and asking for a one-time courtesy reversal, especially if it's your first one. Banks don't have to say yes, but they sometimes will, and the call costs you nothing but a few minutes. It's also worth knowing that many banks and credit unions have reduced or eliminated overdraft fees in recent years. If your bank's fees keep catching you, another institution might simply not charge them the same way. The original purchase wasn't the problem. Alex's gas was not a reckless decision. The problem was a system where a $5 gap can quietly become an $87 one, and where the fees land hardest on the people with the least room to absorb them. A checking account is supposed to help you manage your money, not turn one small shortage into next week's crisis. The goal isn't just to dodge a single fee. It's to keep one small, ordinary shortage from becoming the thing that sets your next paycheck back before it even arrives.